Hello everyone, welcome back to this week's quick dive. What are we going to talk about? First, EPF, big dividend, juicy. Next, VS Industry, once again, Andy Hall is in the news. They're going to fight. We'll give our thoughts. And lastly, we'll talk about the rise or the resurrection of palm oil companies and the industry in general. Now, as always, before we begin, nothing of what we say should be taken as financial advice. If you need that sort of advice, please speak to a professional. And also, one more thing, we do not own the stocks mentioned in this video.
Techs are crashing. Is it time to get out or is it an opportunity to get in? In our next deep dive, we'll be covering 3 precision manufacturers, Genatech, Greatech, and SAM Engineering. The event will start on the 17th of March and you can get the early bird discount in the links in the description or comments. So the first topic we're going to be talking about is EPF's latest announcement. They actually declared a 6.1% dividend rate. Yeah, and it's better than pre-pandemic, which is around I believe it's around 5.4%.
Yeah, the market rebound. They bought a lot of tech stocks in 2021. Right?
Yeah, man. Or they actually made a lot of money in glove, then they jumped ship to tech, then they made money in tech, then yeah, who knows. But what are your thoughts about this?
No, I think it's very good. It's again testament to how good, how well run EPF is, and it's one of the, a lot of our government agencies, most people will agree, either not well run or there's very questionable practices. But certainly EPF, which is one of the most, some can argue is the most important government institution out there, is run very, very well. And if you look at 6%, that's not just pre-pandemic. I mean, not just just before the pandemic, but it was as good as during the stock market boom periods from 2010, 2011 onwards. So very, very respectable, very respectable. I know in the next slide you have a point about the breakdown, right? So
yes,
the big change. Yes, you want to explain the big change.
Want to explain a little bit what is this 2 pie chart means. Is basically okay. So you see the top at the top row, right, I actually mentioned that they invested in a few asset classes. So that's your fixed income instruments, that's like your government bonds, your fixed D kind of thing.
That's right.
And then the orange color bar is your equities, the gray one is real estate, and the last one is money market instruments. So I want you guys to pay attention to these 2 pie charts. You see that there's a difference between the equity segment as well as the fixed income instruments and real estate. They actually did shift a few from one asset class to another. In 2021, they actually expanded that pie to about, I would say 9%.
Yeah.
And they are managing trillions of
about
ringgits.
a trillion. A trillion. So that's how much, 90 billion?
Yeah.
Yeah, that's like bigger than Maybank,
Yeah.
Or thereabouts, So that's again, without looking deep into the data, right, you can see that, equities really pulled the weight for EPF in the past couple of years, right?
Yeah. And I think another thing that I'm going to show is their investment performance.
Yeah.
So you can see that in 2021, their equity side actually contributed 58% of the income, and they only put in 44% of the money into the asset. And if you compare with your fixed income instruments, which is your bonds or fixed D, they put in about 45%, but they only generate 29% of the income.
Yeah, if you do the math, actually, so since we got a 6%, EPF income return, declaration, right? 44% of total investment assets, but produce nearly 60%. So if you do the math very quickly, right, if you assume that everything is in equities, right, that number would be at 8%.
Yeah,
actually 8, touching 9, right? So it just goes to show again that a lot of people are very afraid of investing in stocks, and they say it's gambling.
Yeah.
So here you can see, your pension fund, gambling 44% of their money, right? Yeah. But look, this is again without even showing how EPF does things. We know that this is how they manage the portfolio very well, and how equities has actually been the big driver for EPF. So for those of you who believe in EPF, right, you should also believe in stocks, is my point.
Yes.
Because that's where they get a lot of their returns
100%,
from.
100%.
Now, a notable mention is real estate infrastructure. So, some of you all might be listening to what I say. Okay, I accept what you say. Then does that mean real estate and infrastructure is good? Yes, you see, it's 6% of total investment assets, but 12% of income. So you might think, well, it's double, isn't it better than equities? I wouldn't think so, for the simple reason that, to ask yourself, right, look, why is it at 6%? And the reason is because real estate is not liquid, right? Secondly, you've got trillions of assets. So let's say you want it to be like equities. Let's say real estate and fixed income instruments swap, right? Real estate is 45%. So that's like 450 billion, right? One big building like TRX or Merdeka 118 is, maybe tens of billions.
Yeah, just a point that I want to add. If you've imagined that 100% of the fund actually went into real estate, can you imagine people will be begging EPF to please sell the property, I need the money right now. Yeah, how are they going to cash out or liquidate their asset, man?
Yeah, and if you look at if you think about it this way, right? If they buy real estate and majority right, maybe 80-90%, yes, there's a liquidity issue, but also they need to generate rental, right?
Yeah.
Because they can't sell now.
Correct.
So they will need to rely on rental. Here's the thing, right? In a situation like the pandemic, where nobody is visiting, let's say, malls or using different venues, a lot of factories have to close down. And if they own all this land and they're not generating income, how are they going to pay? The second thing is this. EPF tries to target 5-6% a year. But if anyone who invests in real estate will know, in terms of rental yield, assuming you don't use that to buy the property, it's purely cash. Rental yield is like 2, 3, maybe 4%. Where are they going to get that additional 2% to pay you?
Yep.
The only way is that they have to buy a REIT lah. Maybe that's the only way they can pay, right? So again, those are our general thoughts. Any final thoughts for yourself?
Nope, nothing much. It's just that, go stocks, man.
Yeah.
That's why we love stocks.
All right.
By the way, guys, if you need a third-party opinion on your stock analysis, you can actually share us your report to us. Just email us right over here. Please do tell us, what do you think about the business qualities? What are the drivers moving forward, as well as what is the risk? Don't only share with us the financials of the company, and make sure it is presented in a Google form or Google Sheet format. And looking forward to read your reports. Okay, so the next thing we're going to be talking about is, yet again, Andy Hall.
Our favorite activist.
Yeah,
right?
So this time, VS Industry kena Andy Hall.
Yes,
so,
Andy Hall is a verb now, right?
Yeah, it's going to be a verb already. We are the first one to call it.
Andy Hall, yes.
Yeah, and because of that, their share price actually tanked about 15% just in one day.
Yeah. And I think year to date is a lot uglier, right?
Yeah,
it's a lot uglier.
So, what do you think about this issue, man?
So I think one thing to consider is to compare roughly with what happened with ATA IMS. I think what happened with ATA IMS is a lot more severe.
Yep.
Here, it's a bit funny because it sounds a little bit childish based on what Focus Malaysia report, assuming what the report is correct, which is that VS Industry...
I think basically they unilaterally appointed an auditor without their consent.
Andy Hall's consent, yeah.
Yeah, and then because of that issue, they said that, you know what, we are not going to work with you anymore.
Yeah, and then after that, also, I think in the next two slides, the next one. Oh, there's no more. Oh, sorry. It's okay. Can you go back? Yeah, so it's part of the article as well. We didn't put it here, but Andy Hall was also saying that there's 700 to 800 over foreign workers that,
Yeah, correct. Irregular workers
yes,
that actually got hired by those irregular agents. Basically, they
yes,
just hired them. I think it's without any proper documentation.
yeah, and maybe at risk of abuse, she said, right? So
Yes,
again, this
correct.
is a very uncertain language. It's not strong language. It's
Yeah.
maybe, right? So that's why it's not as bad. And I think as a result, if you look at a lot of the analysts' buy calls, right? I'll just tell you guys, for those of you who are unaware, who are not in the industry, right? This is actually very rare.
Yeah.
To see upside of 80%, you can see on the green numbers, 80%, 63%, 42%. It rarely happens one, right? It's always 10, 15% upside or downside, usually. So a lot of these, companies like Public Bank, M Invest, Hong Leong, they're saying that this is not really a big issue. But do you agree with the analysis of course, we won't go into specifically what they said in the report, but certainly they are obviously disagreeing with
And
the market and also whatever Andy Hall is saying.
I think if you read each of their reports, right, individually, they did actually state the point that both sides also have their own basically conviction and points, but at the end of the day, in terms of business wise, they are confident that it doesn't really affect VS that much. It's just maybe it's going to be like a temporary a knee-jerk reaction. Maybe some of their customers will feel like this news that they may not see as a great light in VS.
Yeah.
But some customers may think it's okay to still continue working, because if there's no foreign laborers, if there's like no cheap laborers, right? Who's gonna do this work?
Yeah.
Who's gonna do this job?
Yeah. I mean, the Malaysian economy is a big chunk, especially in the semiconductors or precision manufacturing industry, is very dependent on foreign labor, right? We are very labor intensive for structural reasons, right? Because we do not the kind of products we produce cannot be easily automated, right? Because they're so what we call bespoke. They're so like unique, right? So you need humans to be involved, and that's where the foreign labor comes in. I think what is also important is that we have not heard from the foreign laborers themselves, right? Is this an issue for them and things like that? We're hearing it from activists and we're hearing things from the company. I think it's worth to know what the laborers actually think, right? Do they feel abused or not? Yeah. I'm sure some are, and I'm sure some not, but I just find it odd that they are not having a voice in this. Now, with regards to your earlier point, right, this is a bit broader conversation about ESG and also economics, right? We talk more about it in palm oil segment, but which one is going to take over, right? ESG or economics. And one thing we were discussing before is that the most important thing are twofold, right? One is the thing I just mentioned, right? Will economics win out or ESG win out? And the funds that actually hold VS Industries, do they have do they have to be ESG compliant? Yeah. And if they sell out, and if there's new investors that take up, let's say like retail or local fund houses, then the issue about ESG will be a lot less relevant already. But what do you think? What's your final thoughts on all this?
To me, it's basically all just white noises. It's all something that will eventually fade away again in the future. But not a financial advice, by the way. I don't own shares of VS. So I didn't really study about the company. But just make sure you do your own due diligence and study about the company.
The last thing I would just want to add is that sometimes we shouldn't be also swayed by these analyst reports. Yeah. Because the potential hidden agenda is this, right? These analyst reports, right, may be produced, right, so that normal retailers will buy into it. And you can see the banks, right, their funds are selling it to them.
Exit liquidity.
Possible. Exactly. It's very, very possible that is the case. So sometimes they'll put a negative report so that they can buy it at the cheap, right? So again, take analyst reports with a pinch of salt, unless you have the time to really look into the analyst report and say, okay, yeah, I think what they're saying is reasonable or not reasonable. So yeah, I'll end it there.
Enjoying the content so far? If you did, make sure you smash the like and subscribe button and comment down below if you have any question regarding this video. Also, make sure you hit that notification bell so that you will know when new videos are out for you. Okay, so the last one we're going to be talking about is oil. So if you look at the recent news, palm oil actually hit at a very high price level.
Yeah, I believe it touched 10,000 already.
Oh,
what I'm
is
saying.
it?
Yeah. I think so. I think it's close.
Oh,
Maybe
okay.
you know.
Actually, in a lot of I see there's a lot of like in celebrities, investor, right? They say that this is like a very first time that they're actually witnessing this.
Yep.
Yeah, and it has not really happened then. Both palm oil and also oil price also surged at a very high level.
Oh yeah. I think that part of the causes of oil and palm oil rising, right? Oil is like 100/10. This is like 2014 levels. This was when, back in the day, this was what Sapura Energy was making their projections on when they were doing the acquisitions. So that, it's a throwback, to 8 years ago. But look, why I think a lot of this is happening is always a mixture of things. One is speculation for sure, right? Not every price hike is purely rational. But I do think there's a rational element to this. And I think that ties back into ESG, which we talk about. For the past 2 to 3 years, the ESG theme is so strong. And so all these so-called old economy, commodity, carbon-inducing industries get banged down and all that. So why is the price rising? Why I think there is a rational reason. Look, if you stop spending into these areas, and there is data out there you can find where in 2021, it was the lowest year for oil prices, for example. For oil capital expenditure, right? Guess what? Supply is going to be stagnant or shrinking.
Yep.
Right? So right? The demand for oil and palm oil will always be constant, right? It's not like one day suddenly China decided, we're not going to use oil anymore. So if the demand is steadily going up, right, it doesn't have big spurts up or down, and the supply remains constant or shrinking, what's going to happen?
Yeah. I mean, to give you a more practical example, right? This is how I understand things. So imagine, right? I'm pretty sure you guys have most of you guys have a car, and you guys use petrol to pump your cars, right? So imagine that RON 95, from 2 ringgit per liter, it went up to 10. Yeah, man. Who's gonna buy a car, man? Who's gonna like?
Yeah, you think people care about ESG anymore?
Yeah, they'll be begging.
Yeah,
they're like, no, please. We want cheap oil. We don't want expensive oil. Or for the another matter of fact is your cooking oil.
Yeah, palm oil.
Yeah, if let's say I don't know I don't usually go for grocery shopping, but let's say assuming that the price of that cooking oil went up double or triple.
Yeah, exactly.
Yeah, people will start to make noise, definitely.
Yeah,
and
because we are Malaysians, you see, we don't cut the fat. We don't get rid of the oil. We keep the oil, we just complain about the price. We need our food to be quite oily, actually.
Yes.
So, but I think it's a really good lesson for investors, because, especially for myself, right? Because sometimes we get swayed by themes like ESG and all that, and it seems like there are all these billion-dollar funds, pushing the prices down and all that. But reality has to take over, and I think it's clearly shown. I think a lot of the palm oil stocks in Malaysia are up like 30, 40, 50, some even 80%, right? So like that's tech level returns, right? Back for compared to last year. Of course, tech is a bit higher, you get 200-300%, but palm oil is going up, and those that completely avoided palm oil or oil and gas stocks, right? Usually, what their portfolio looks like is heavy tech. Usually, right? Because those that don't want to touch old economy will go to the new economy, so to speak. But of course, this year, at least in the first 2 to 3 months, pain is here. So yeah, what do you think? What else would you like to add?
Nothing much actually. Yeah.
Yeah. So guys, I hope you enjoy the lessons here. And just to summarize, EPF is really good. One, two, the Andy Hall situation and all the alleged labor mispractices is might be overblown. And of course, when you build a portfolio next time, don't be too swayed by one thing or another. Diversify properly. Do include some of these old economy stocks, right? Might save your portfolio from a little bit of pain. Now, we go on to the question
and
answer. And it is actually to do with oil and gas also, right? So Jonathan, maybe you want to read out the question.
Yeah, so give me a second. So we got a question from our Instagram story. So Michael Chin 97, he asks, is oil and gas sector dying due to electricity alternative? A myth or something?
No, because to produce... So the irony is that to produce electricity, you also need a lot of those non-renewable energy sources.
Battery, lithium ion,
coal.
Yeah,
right.
Coal, affordable.
So the idea that like building a Tesla car and getting electric is better for the environment. It might be, I've not done the math, but certainly they are using a lot of coal for that to happen, right? China is very happy, right?
Yep.
So in terms of oil and gas, why I say this, because I'm not sure if I've said this in previous quick dives, but I think I will remind, or I will say it again. This idea that an electric, for a particular product, in this case, let's say like electric vehicles, right? What was previously powered by a non-renewable like oil and gas, being replaced by electricity is actually not a new thing. Take, for example, early 20th century where the light bulb, right, became big. So the light bulb is a light source and it replaced kerosene, which was the previous commonly used light bulb. So kerosene is, oil and gas, right? And it got replaced by electricity. So at that point of time, kerosene was 90% of the usage for oil, petroleum, which is a lot bigger today than versus like cars. I'm not sure what cars is, but it's definitely not 90%. So at that point in time, people were already calling for the end of oil and oil price was tanking and all that. But guess what? Something new popped up, which was cars.
Yeah.
Right? So the thing about oil that people got to understand is very cheap. It's very plentiful. There's a lot of it. Okay, there's a lot of dinosaurs died, right? And it's also very flexible. So the situation today compared to the time in the light bulb era is that actually the usage for oil is a lot more diversified. You air travel, you're not doing electric. I think that's going to be so dangerous if you do electric.
Imagine suddenly there's like a power down, like there's like no backup for it.
Exactly, right? So that's one. Then you've got your oleochemicals and your plastics and all this, all this made from oil. This is made from oil, right? So they're a lot more diversified. So that, to cut a long story short, there's a lot more to this obviously, but I think that oil and gas is here to stay, even if there are electric alternatives. The whole irony, I've been saying this also, is that it could be that Elon Musk ushers in the next age of oil and gas usage because he's trying to achieve space travel, right?
Oh, yeah.
And they're not going to electrify space travel. Every time you see a SpaceX shuttle or a rocket fail, right, you just look at the amount of oil and gas.
Oil has been used, man.
So who knows? Maybe Elon Musk will be the guy that ushers in. He'll replace it with something else. But what are your thoughts on oil and gas?
Definitely don't neglect this industry because I believe that oil and gas has its part to play in this world. So study them and also please don't neglect them and don't avoid them because of ESG issues. That's what I'm trying to say. Yeah. But other than that, I think that's about it.
Hope you guys enjoyed the video as usual. If you did, if you last all the way here, yes, you definitely did. And so please share with your friends and family who you think might benefit from this kind of content, don't forget to, of course, like, comment, subscribe, the usual stuff. Check us out on our other social media channels like Instagram, Facebook. We have a Telegram group. Please join it. And yes, see you in the next video.